Are you aware of this huge insurance risk? Hi, this is Clint with the Stitser Real Estate Group, and before we begin, I'd like to call your attention to two links on our blog. First, if you're interested in buying or investing in real property, please click on the Search Now link. If you're interested in selling real property, please click on the Property Valuation link. So about this time last year, my wife and I moved out of our house into a new home, and we put our home on the market. And it was a vacant home. Fortunately, it went into escrow real quick, right? So we thought everything was good. We just kept paying our insurance bills, our tax, our water, everything was great. Well, it fell out of escrow. And over the course of the next couple months, it still hadn't sold. One day I got a call from my insurance agent, and he said, "Hey Clint, is that other property? Is that a rental property now?" I said, "Oh no, it's for sale, and it just fell out of escrow. We're getting a bunch of showings. It'll sell quick, no big deal." And he goes, "Well, because it's not an investment property, and what, you've been out for how long?" And I told him, and the next thing I know, I got a cancellation notice in the mail saying that they were no longer going to insure my property. Well, little did I know that when your property is vacant and you don't go to a certain number of times and there's a certain use with it, it can in fact create a non-coverable property. So what does that mean? If I would have had a massive leak or something would have fallen and gone through the roof, any catastrophic damage to the house, there are certain instances because it was vacant that I would have not been covered. So today we're going to go visit Bridget at Country Financial, and we're going to learn all about vacant home insurance and what you need to know. Okay, hey everyone, this is Clint. We're back here at Country Financial with Bridget Evans to tell us all about vacant home insurance and what you need to be aware of. Earlier in the video, I told a story about when I moved out of the house and totally didn't know that this was a situation I had to be aware of, and there's a lot of different factors you need to think about and consider even when you go on vacation. So here's Bridget.
Perfect, thanks. I appreciate your time. First, I want to put out a little disclosure that I do work for Country Financial, and if you're planning on vacating your premises, buying a new property, turning it into an investment property, it's always just a good idea to consult with your own insurance company, because each insurance company might have different coverages or different ways that they cover you.
Absolutely, makes perfect sense. Thank you.
Perfect. So you were getting ready to buy a new house, you moved out of your house, and it was sitting vacant for 5 months or something like that.
Yeah.
So an insurance company is going to look at that a little bit differently. If they had you insured as an owner-occupied dwelling and you no longer live there, typically an insurance company will consider a home to be vacant if it's been vacant for 30 days or longer.
Got it.
Okay.
Got it.
The risk in having a vacant property versus a homeowner's property is nobody's there to mitigate the risk. Right? So a claim could happen over a period of time or even in a very short period of time, and nobody's there to stop the damage or stop the risk from happening altogether. So the insurance company could be on the hook for repairing or replacing whatever kind of damage happened.
It would have been a lot worse rather than someone having been there to have stopped the issue.
Yeah,
right?
Yeah.
Tell me the story again. You told me earlier about a neighbor stopping the leak.
Yeah, I did. So we have a neighbor that lived across the street from us, and they were getting ready to go on holiday for Thanksgiving. It was a period of time when Reno was experiencing really big freezes. So they left for a week, only a week, and we had some big freezes. Their next door neighbor walked out and they saw water rushing from out underneath their threshold of their door.
Yeah.
So they started panicking, knowing that their neighbors were out of town. So they broke a window to get in and found that a pipe had frozen and burst, and water was literally, they were probably about 2 to 3 inches of water throughout their entire downstairs.
Holy smokes.
So they shut off the water valve, got the insurance companies involved, all that kind of stuff. But that just goes to show you that a claim can happen in a matter of a couple days or over a longer period of time. And if it's a vacant home, it is again at a bigger risk.
Right, and if in my case, if that would happen at my house and I had not told the insurance company it was a vacant home, then it would have been likely that coverage probably would have been denied, and I would have been responsible personally for those damages. So really important that if your home is going to be vacant for 30 days or more, was the cutoff you said earlier?
Yeah, 30 days or longer. Yep.
Yeah, that you absolutely need to tell your insurance company, even if there's a change in premium or change in coverage, it's definitively worth avoiding that risk where suddenly you're personally responsible for losses of who knows how much, right?
Yeah.
So anything else?
Yeah, I would just say if you're getting ready to go on an extended vacation of some sort, let's say you're going to go to Europe, backpacking for a month.
Right.
Just a really good idea to have somebody come and stop by your house. If you're not going to have somebody stay there, just a good idea to have somebody stop by your house maybe every other week just to make sure everything's intact. There's been no theft or no unwanted claims that happened while you were gone.
Perfect. And then also we mentioned a change in use. So from an owner occupied to an investment property, we need to make notice to the insurance company because that's going to change the coverage and the risk profile as well, right?
Yep, exactly. So typically if you've got your homeowner occupied insurance, your insurance company will provide for you a certain coverage for the replacement of the dwelling.
Mm-hmm.
They'll provide for you coverage for liability and guest medical,
Mm-hmm.
and then a lot of personal property. It's about 75% of your dwelling coverage. If you're going to change your coverage or your occupancy of your dwelling to an investment property, again, we're going to pay a certain amount to replace the home.
Right.
Liability, guest medical, and very little personal property, whereas in a vacant property, there's even less coverage. So replacement for the home, liability and guest medical, and little to no personal property in there.
And always incredibly important that you guys know the status of the property, else if it's improperly insured, there's a possibility of no coverage.
Exactly.
Okay.
Yeah.
So big lessons there. Bridget, thank you so much for educating us. If you have any questions, I highly recommend you give her a call. We're here at Country Financial. This is Clint with the Stitser Real Estate Group, wishing you great success in all your real estate ventures. Thanks for watching. All right, so that wraps up our interview with Bridget over at Country Financial. I hope you found the information as useful as I did and that you're able to be proactive rather than reactive as I was. Again, this is Clint with the Stitser Real Estate Group, wishing you great success in all your real estate ventures. Thanks for watching.